This is The Bottom Line. The Bottom Line on 938 Live.
Now, the U.S. Central Bank held to its cautious, dovish stance as it didn't change any language it uses to signal its rate plans. The Fed's chair, Janet Yellen, said that any interest rate hike will happen only after a considerable time after the end of the bond-buying stimulus program, which is likely to happen next month. Hence, U.S. markets embraced the promise of continued cheap money, sending the Dow Jones Industrial Average to a new record high of 17,157. Now, for his reaction to the announcement, we have on the line Glenn Maguire. He's Chief Economist of the Asia Pacific region at ANZ. Good morning, Glenn.
Good morning.
Now, Glenn, as we said, Janet Yellen said the central bank is keeping interest rates near zero for a considerable amount of time. How much and when do you think the Fed will start raising interest rates?
Look, the key question with the FOMC statement was not so much what Janet Yellen said, but what Janet Yellen did. And although she said she was going to keep interest rates unchanged for a considerable period of time, there were two notable developments. One, the Fed revised up their forecast for December 2015 by 25 basis points to 1.375%, so they're forecasting a faster pace of tightening. And two, an additional member joined in dissenting against this decision and voting for more hawkish action. So though the Fed sounded the same, what they're forecasting is actually a little bit more hawkish and suggests a faster pace of rate tightening. So we're sticking to our call of a March 2015 25 basis point tightening from the Fed to commence their tightening cycle.
And what impact do you expect what they did to have?
Look, I think at this stage it's important to remember that the entire reason the Fed is doing this is because the U.S. economic outlook is improving. And for the first time since the Great Recession of 2007 to 2008, the U.S. economy is actually strong enough to withstand higher interest rates. So it's a positive environment. I think you'll be seeing probably the economy continuing to strengthen, and those consumer-facing and cyclical sectors of the stock markets or equity markets or global markets aligned to the U.S. consumer will continue to perform.
What are your comments about the economic growth in the U.S.?
Look, the economic growth is starting to pick up, and I think there's two important transitions that are occurring which we haven't seen before. The first is the recovery is one that is becoming accompanied by strong wage growth. To date, the recovery has been wageless. There's been no gains in consumption. So as we start to see wage gains, U.S. consumers should spend more. The other is there's been a lack of business investment, and I think you're going to see business investment pick up over 15 and 16. And there are two key dynamics that have been absent from the U.S. recovery to date that will actually only reinforce it and make it stronger in 15 and 16. So growth is likely to step up from around the low 2s this year to the mid 3s next year and the year after.
What kind of impact do you expect on Singapore?
Look, this is positive. Singapore is very highly correlated to the U.S. economic cycle, both from a growth perspective. It's aligned to the business electronics cycle. Perhaps the only thing to watch is Singapore is also very highly correlated to the U.S. interest rate cycle. Singaporean interest rates are going to be rising in lockstep with the Fed.
Thank you very much, Glenn. Glenn Maguire, Chief Economist of Asia Pacific at ANZ. Thanks for joining us on The Bottom Line. The Bottom Line brought to you by Turkish Airlines, Europe's best airline.